provide crypto services. Furthermore, I do think that this will just get bigger over the coming weeks and months. Additionally, the practice of banks providing crypto services will become commonplace. Welcome to Peepo Coin channel. If you're new to the channel, you will become a subscriber by the end of this video. So let's get started and actually discuss a couple topics that date back to January. Banks can fully support cryptocurrency consumers, according to Jerome Powell. He stated precisely this: since many of our banks are right that we regulate and oversee, our role with Bitcoin really is to look at the banks. And we believe that they are perfectly capable of serving crypto customers as long as they understand and can manage the risks, and it's safe and sound. However, the threshold has been a little higher for banks participating in this, and we haven't received any significant updates on this. Until recently, on the 16th of this month, Fed Chair Jerome Powell stated that cryptocurrency is becoming mainstream, that a stablecoin legal framework is a good idea, and that bank regulations on the subject will be Luso collaborated with Congress in an attempt to obtain a stablecoin legal framework, which would have been a good place to start. We didn't succeed. I believe that the climate is shifting and that the entire industry is becoming more mainstream. As a result, Congress is once more considering a framework, a legal foundation for stablecoins in both the Senate and the House. That's a good idea, depending on what's in it. That's what we need. Now, there isn't one. Furthermore, stablecoins are a digital commodity that may be quite popular and ought to include standard consumer safeguards and transparency, and the House and Senate are working on that. That's a good thing then. When it came to the guidelines and regulations we imposed on banks, we adopted a rather conservative stance, and other bank regulators adopted an even more conservative stance. I believe that will be somewhat loosened, and I think we'll strive to do that in a way that maintains safety and soundness, that allows and encourages appropriate innovation, and that, once more, doesn't make banks less safe and sound or put customers at risk in ways they don't understand. Stablecoins are the main focus here, correct? Our goal is to introduce a stablecoin framework. In order for the major banks and even the Fed to invest in stablecoins, we want to support stablecoin regulation. Here we will begin to witness a far more significant change, and it will come from well-known organizations like the Fed. More recently, when we consider the events of this year up to the Fed's latest announcement, we did observe that the FDIC just made it simpler for banks to participate in cryptocurrency operations. This is among the most effective strategies to further mainstream cryptocurrency. Thanks to Travis Hill, the interim chairman and governor of the FDIC. The date of this incident was May 28th. Additionally, we received confirmation from the U.S. regulator OCC that banks are permitted to use Bitcoin and cryptocurrency services like asset custody. Once more, this occurred on May 7th and involves one of the largest regulators in the United States. However, on the 22nd, the OCC released an update reaffirming that certain crypto activities are permitted and that banks should have the necessary risk management procedures in place before engaging in them. Amidst all of this, we recently witnessed the Fed make one of the most significant and, I would argue, most optimistic announcements to date. It's crazy, because as XRP holders and content producers, we have discussed the question of when the Fed will flip over the past few years in particular. When will the Fed begin to take a strong interest in cryptocurrency and begin to formally support it? We conjectured about this for years, as far back as 2017, 2018, 2019, 2020, and so on. All we hear about each cycle is that the Fed will either embrace, adopt, or integrate cryptocurrency or add it to their balance sheet. Up until 2023, the Fed was the main focus. Today, as we examine all of these announcements, banks that provide cryptocurrency services are the main emphasis. We just got this up. The Federal Reserve has announced modifications to its expectations for banks' actions involving dollar tokens and cryptocurrency assets, as well as the removal of guidelines pertaining to these activities. This is huge, guys. 2.1 million views. It was clear to see how significant this announcement was. Let's get into more detail about this now. Mario Nolfal did write a piece discussing breaking the Fed. The Fed encourages banks to innovate by doing away with the crypto red tape. In order to allow traditional banking to enter the crypto realm, the Federal Reserve recently removed its stringent crypto guidelines that required banks to obtain special approval before handling digital assets. The Fed canceled several supervisory letters from 2022 and 2023 that imposed significant obstacles on banks interested in crypto and stablecoin activity in a broad release on Thursday. A significant win for financial institutions keen to investigate blockchain potential. The coordinated effort with the FDIC and OCC marks a radical shift in regulators' perceptions of cryptocurrency from hostile skepticism to cautious innovation support. And you know what? Operation Choke Point 2, which I covered for several weeks in 2023 because it was a major topic, comes to mind when we consider what is happening here. That is, everything being destroyed. This is enormous. The emphasis on banks receiving approval is the reason this is so significant. This makes it possible for trillions of dollars to enter this market. There will now be a huge influx of users as well as the main traditional institutional actors. This is a big news, and the Fed's website has the complete breakdown right here. The Federal Reserve Board has announced modifications to its expectations for banks' actions involving dollar tokens and cryptocurrency assets, as well as the removal of guidelines pertaining to these activities. This is where they begin to deconstruct that. These steps further encourage innovation in the banking sector and guarantee that the board's expectations stay in line with changing risk. By rescinding its supervisory letter from 2022, the board is requiring state member banks to notify customers in advance of any planned or ongoing operations involving cryptocurrency assets. Because of this, the board will no longer need banks to notify them. Instead, it will use the standard supervisory procedure to keep an eye on the actions of banks' crypto assets. Also, the supervisory letter from 2023 about the supervisory non-objection procedure for dollar token activity by state member banks. Lastly, the board is joining the Office of the Comptroller of the Currency, OCC, and the Federal Deposit Insurance Corporation, FDIC, in rescinding two 2023 statements that the federal bank regulatory agencies jointly released on banks' crypto asset exposures and activities. The board will collaborate with the agencies to determine whether more guidelines are necessary to encourage innovation, particularly actions involving crypto assets. This is huge, then. And what do you know? Additionally, we have learned that Trump Media will be launching America's first ETFs alongside CryptoComp. On the 22nd, this took place. When we consider all of these significant upgrades, it's a bit overwhelming, but they're happening so quickly. If you truly think about it, the OCC was only recently established, whereas the FDIC was back in May or had just started in March. I believe the OCC's initial update was sent in March as well. The Fed is now announcing significant adjustments in April. I am therefore eager to observe what transpires with the Fed and the FOMC meeting in May. I simply believe that.